Hi, this is James Shug with Westpac London's end of day report for Wednesday, March the 21st. Today's budget day in the UK. I'll run through some of the details there in a moment, but I'll just start with a more general comment that there seems to be a bit of malaise in equity markets today. The run-up in stock prices that we've seen over the last month or two, perhaps in some investors' eyes, has run a little bit ahead of the likely performance of the economy and consequently firms' profitability over the next little while, and that seems to be acting as a bit of a weight in equity markets this week. Recall the comments we had from BHP and Rio recently, talking about slower Chinese steel production, for example. That's just one example of a little anecdotes that seem to be coming through, suggesting that maybe markets have just got a little bit ahead of themselves in terms of expecting a favourable growth picture to keep supporting stock markets. I mean, on the data front today, for example, in the US, we saw housing starts. They only fell a little bit, down 0.9% in February. They're still very close to the 4.6 million annualised pace. That is the highest they've seen since the tax credit for home buyers was operating back in 2010. So there is a bit of an uptrend coming through, but it's very, very modest. What the figures also showed was close to a third of all pending home sales contracts are being cancelled or aren't followed through on, and that's largely due to applications for mortgages being denied. So there's still some constraints on the housing market, even though that mild upswing in sales has started to take place. We had Ben Bernanke today talking to Congress. He mentioned that higher energy prices not only boost inflation, but they also act as a tax on consumers by constraining their household disposable income. So those comments may have been taken note of as well. In the UK, as I said, it was budget. Nothing much to report there really in terms of anything exciting or new. I mean, the broad numbers are the same, 126 billion sterling deficit this year, a slight revision to the growth numbers. They're looking for 0.8% growth in 2012. More optimistic than us at Westpac. We're looking at a flat economy actually this year because we're more pessimistic on the European story. But there were some measures that certainly are grabbing the headlines. A substantial lift to the personal allowance, which means that you don't have to pay tax now on the first 9,000 and something pounds of income. That was lifted by a few thousand. The top tax rate was cut from 50% to 45%. We saw increased stamp duty on homes worth more than £2 million, and so on and so forth. I mean, a whole bunch of measures, but the bottom line is this is still an austerity budget, which, depending on which side of the political fence you sit, is either unnecessarily slowing the economy or supporting the economy because it's helping keep interest rates lower than they would otherwise be. And so that's the budget today. We had the Bank of England minutes to their March meeting, where 2 of the 9 committee members favoured voted for an immediate further expansion of the asset purchase plan from 325 billion, which is the current target, due to get there by May, to 350 billion. So the bias on the committee is towards downside risk to the economy, meaning greater risk that the inflation target will ultimately be undershot, even though it's still being overshot at the moment. And that's about it in terms of events. I mentioned the market prices on commodity markets. Very weak bounces after yesterday's steep losses. 0.04% for copper. Gold up 0.2%, and oil a bit better, up 0.7%. The gold price is $1,650 an ounce, and crude oil is on $106.81 a barrel. Remember that some of those commodities were down, between 1 and 2% yesterday. Aussie dollars kept falling. It was down 1.5 cents yesterday. It's down another, half a cent or so today at 1.044 against the US dollar. All right, that's it for today. I'll be back again the same time tomorrow.